Regulators are concerned that the public will be misled if clients do not clearly understand this information. Any sales communications or marketing materials prepared by you must be prior approved by WFG to make sure the information is clear, accurate, and does not include terminology that tends to exaggerate or contain other potentially misleading information. The Provincial Insurance Acts contain provisions dealing with the use of false or misleading statements as to the terms, benefits, or advantages of any contract or policy of insurance issued or to be issued. Such statements can be construed as an unfair or deceptive practice and lead to severe penalties under these acts. The best way to safeguard yourself and your clients or prospective clients is to always use materials approved for use by WFG or by the company whose product you are selling. It is improper to call a life insurance policy a plan or program. Calling a policy by a name that hides or disguises that it is life insurance is misleading. When considering the accuracy of statements, pay attention to the context in which they are used, the audience they are used with, and the overall clarity of the communication. The potential complexity of the proper use of a term is one reason why you should always use sales materials that have been approved by the company. When you provide information on tax-related matters, example tax deferral, you must disclose that the client's specific financial situation will determine tax status and that he/she should always check with his/her tax agent. Tax-related matters require specific disclosures. Whenever you mention terms such as tax-deferred, tax-free, tax-advantaged or non-taxable, you must provide a detailed description of how tax status is maintained or affected. In addition, you should provide a disclaimer such as only a thorough review of your specific situation can determine if there are tax advantages available to you through our products. You should consult your tax agent or lawyer about your specific situation. Tax matters are complex and not providing proper disclosure and disclaimers may expose you to significant liability if the proposed tax status is incorrect. Clients may fail to disclose important tax-related information or fail to advise you if their tax status changes. To protect yourself and reduce your liability, you should always use the proper disclosures and disclaimers. Use of the term tax-free is potentially confusing to a client and must be avoided unless the taxable status or tax treatment of the case in point is truly tax-free. Tax-advantaged is usually a preferable term from a compliance standpoint. 4.2 Sales Communications, General Approval Requirements. Materials must be submitted to WFG for review and approval well in advance of the proposed use date. Recommended minimum is 2 weeks. Note that some materials can only be submitted by CEOs. Approved advertising and sales material aimed at consumers will be subject to the following limitations. If any material fact within an approved piece changes, that piece is no longer approved and must be withdrawn from use immediately. If continued use of the piece is desired, it must be revised and resubmitted for WFG approval as soon as possible. If materials are edited after they have been approved, then resubmission is required. In addition to the requirements of this policy and/or conditions attached to approvals, applicable laws governing the use of WFG information and WFG advertising, marketing, and sales materials, logos, trademarks, and service marks shall apply. Materials are only approved for use with the audience and in the medium disclosed at the time of the review. For example, if advertising copy is approved for use on a CD-ROM disc that will be distributed only to consumers, the approved wording may not be used with consumers or on a website without prior company approval for such additional or different use. 4.3 All Sales Communications. Advertising is defined as any action that calls a product or service to the attention of the public. For purposes here, we are referring to advertising as all sales communications and Paid announcements that include, but are not limited to, the following. Advertising in trade and consumer publications, including materials used to recruit agents. Radio, television, outdoor media advertising, or public announcements. Any communication for which a placement fee is paid, regardless of whether it is a solicitation for insurance, recruiting, or sponsorship of an event. Advertising transmitted by telephone, fax, or computer, via the internet, email, or other means. 4.4 Unsolicited email and fax advertising. The Personal Information Privacy and Electronic Documents Act, PIPTA, and substantially similar provincial privacy legislation contain limitations and restrictions on how you may solicit business. If you are considering the use of email, fax, or any other mass distribution method of soliciting business, you must comply with the provisions of all applicable privacy
legislation. Please refer to WFG's privacy policy for more details on the PIPTA and applicable provincial privacy legislation, their restrictions, and the actions you must take to comply with their provisions. Fax and email advertising to consumers contracted through you, including broadcast faxes, is not considered unsolicited since there is an existing business relationship between you and the recipient and/or the email/fax is sent at the request or with the consent of the recipient. 4.5 Types of materials that require approval. Prior to printing or publication, submit all advertising materials for all media for approval, including but not limited to advertisements for newspapers, magazines, industry publications, radio, television, telephone, computer, and outdoor advertising, i.e., billboards, bus placards, etc. Agents can acquire a website by following the marketing steps available on WFG online. Only websites created, reviewed, and approved via this process will be approved. All texts and materials in any media, regardless of the subject matter, i.e., insurance, annuities, recruitment, etc. Advertising messages designed to be delivered by automatic telephone device, fax, or computer. Advertising that is based upon material furnished by WFG. This includes using an WFG supplied item in a different medium, example using a local level mailer as the basis for a newspaper ad. Brochures, flyers, descriptive literature, broadcast faxes, sales aids, direct mail, letters, newsletters, postcards, reply cards, illustrations, and form letters for all types of presentations to the public and agents. Prepared sales and training presentations, seminar, and telemarketing scripts or pitches, including scripts for on-hold messages, video, and computer presentations, or slide, or video shows designed to communicate information about WFG, its affiliates, their products, programs, or practices, and any material designed to create interest in WFG or its affiliates' products or programs, an agent, or to induce the public to subscribe to the WFG service. Such material may include, but is not limited to, items to be used for lead generation, sales promotion, agent recruiting, agent training, informational updates, newsletters, and direct mail. 4.6 Requirement to approve. Even though a WFG agent may be targeting a local audience, the Internet is a global medium and individual access to most sites cannot be controlled. Therefore, WFG places certain restrictions on the information included on a website or in other Internet marketing resources and may require certain disclaimers when WFG or its affiliates' names, logos, or other proprietary information are used, or when WFG and its affiliates' products are referenced. It is essential that all advertising and marketing communications programs and Materials to appear on the Internet be approved by WFG prior to posting. Online. 4.7 Approval Requirements. Hard copies of proposed agent websites or other Internet marketing communications must be submitted to WFG well in advance of the proposed launch date. A minimum of 2 weeks prior is required. This includes website copy and other content designated to communicate or promote an interest in WFG and or its affiliates' products, programs, services, or awards. Please note, it is to the agent's benefit / advantage to submit web site copy for review and approval before it is converted to HTML code, as the costs associated with making changes to copy already converted into HTML code can be expensive. Please provide the proposed website address with your submission. While WFG logos, trademarks and other corporate graphics may currently be used on an agency site, advance written approval is nonetheless required for each subsequent use. WFG considers context to be a significant consideration in the review of proposed marketing material. Any posting of non-approved WFG or product information on an agent website is considered to be non-compliant advertising. In such cases, appropriate action will be taken, including, if necessary, termination of an agent based on the terms and conditions contained in the WFG Agent Service Agreement. In addition, please note the following. Lifting elements from WFG and its affiliates' brochures and print material is not an acceptable form of advertising. As the Internet is an immediate medium, the content of sales literature and disclosure documentation, including product information, can become dated quickly. Legal approvals are based on the entire copy of a given document. Even minor changes or lifted copy excerpts can result in non-compliant advertising. Therefore, all material must be approved by WFG prior to use, even when the source is an WFG and or its affiliates produced document. 4.8 Corporate Standards for Business Cards and Letterhead. This document describes WFG's corporate standards for how agents of WFG may present themselves to consumers and others, using business cards and letterhead. The primary purpose of a business card or personalized letterhead name is to identify the individual agent's association with WFG. It is also intended to indicate the individual's regular title or designation and his / her qualifications for the business. WFG's policy is based on this premise and also incorporates provincial regulatory requirements. Most provinces in Canada have provisions under their respective insurance acts that do not permit an agent to advertise or carry on business in any name other than what appears on his / her license. For instance, if the license is issued with the name James Snow, the individual may not use the name Western Insurance Services or any other similar trading name, where the restriction exists. WFG will apply this ruling to all business card and letterhead requests. And agents who print their own should be aware of and comply with this regulation by seeking prior approval from WFG. I. Business cards. A. Regular designations, other than Quebec. Only the following designations are appropriate for use by agents and others. Life insurance agent. Life insurance salesman / saleswoman / salesperson. Insurance sales representative. Life insurance sales representative. Insurance salesman / saleswoman / salesperson. Insurance agent. Licensed agent. Life insurance agent or life agent. Note, in Ontario, use of the term broker or any form thereof is restricted to those agents whose licenses are issued under the Registered Insurance Brokers Act of Ontario. Use of this designation by others is not permitted. B. Regular designations, Quebec. Note, the following designations are current as of the present time. Agents must use designations related to all financial services licenses they hold and only as follows. Life insurance, financial security advisor. Mutual funds, dealing representative. All business cards and stationery must be in French only or French and English. English. Only cards and stationery are not permitted. For dual licensed agents, business cards will be printed on both sides showing the information relative to the securities activities and the information relative to the insurance sector on the other side. C. Professional designations. Professional designations are granted through a professional organization, such as advocacies. Canadian Securities Institute and the Financial Planning Standards Board Ltd. If the abbreviated form is used, it will be placed beside the individual's name. If the full title is used, it is to be placed under the individual's name. Either or both may be selected. 4. Agents using OFGIA business cards, use of any designation not in the following list must be approved by OFGIA. Chartered Life Underwriter, CLU. Registered Life Underwriter, RLU. Chartered Financial Consultant, CH.F.C. Canadian Investment Management, CIM. Chartered Financial Analyst, CFA. Registered Financial Planner, RFP. Fellow of the Life Management Institute, FLMI. Chartered Accountant, CA. Certified General Accountant, CGA. Certified Management Accountant, CMA. Note, except for those qualified to use the designations set out above, the use of titles or designations such as Financial Security Planner, Financial Planner, Financial Planning Consultant, Financial Counselor, Retirement Consultant, Retirement Counselor, Retirement Specialist, Investment Agent, Investment Counselor, Investment Specialist, and other similar designations are not permitted. 2. Letterhead, including fax cover sheet. All of the requirements of these standards apply equally to letterhead. In addition, the following requirements should be noted. The information about titles and other designations included on personalized letterhead or fax cover sheets must match the information shown on business cards, but some of the information on the business card may be left off the letterhead or fax sheet. For agents of OFGIA, if the letterhead or fax cover sheet contains information not shown on the business card, OFGIA must approve it. A. Names. Only one name may appear on a business card or letterhead, and it must be the name that appears on the life license. B. Email address. Email addresses may be used on business cards and letterhead, OFGIA email addresses only. C. Disclosure. Although not specifically required to be pre-printed on letterhead, many provinces require that an agent disclosure be provided to clients and prospective clients in writing, before conducting business or giving advice. Please refer to the Section 2.0 on ethical conduct for details on how to comply fully with this requirement. Agents are expected to be familiar and comply with the specific requirements for the province in which they are conducting business, including non-resident provinces. D. Miscellaneous. The following should be noted. Personal photos may not be used on OFGIA business cards or letterhead. Logos or insignia other than those specifically provided for in this document are not permitted. Years of service may not be shown on business cards or letterhead. Many of the requirements contained herein apply equally to advertising, and agents are expected to follow them when placing personal ads. They also apply to customized presentations made to clients or prospective clients being applied for. 5.0 Complaint Handling Protocol. 5.1 Purpose. The purpose of this protocol is to define the process to be followed by WFG in dealing with all market conduct complaints. 5.2 Definition and Scope. A market conduct complaint is any complaint that brings into question the actions of agents in regard to his/her conduct in connection with the sale, sales development or service of WFG approved insurance products. Complaints may relate to accusations of a criminal nature, forgery, fraud, misappropriation of funds, failure to comply with the Insurance Act or regulations, acting without a license, disregard of replacement regulations, tide selling, accusations of unethical behavior, failure to put clients' interests ahead of his/her own, misrepresentation, twisting, churning, etc. For clarification, twisting is the unethical act of persuading a policyholder to drop one policy in favor of another, solely for the purpose of selling another policy, without regard to possible disadvantages to the policyholder. It can also involve using the values, either through loans or through the redirection of dividends, of one policy to purchase another. Churning is generally confined to securities and commodities, but can occur with annuity-type contracts including segregated funds. It occurs when a life agent, exercising control over the volume and frequency of trades, abuses a client's confidence for personal gain by initiating transactions that are excessive in view of the character of the account and the client's personal objectives. Any complaint identified as a market conduct issue presents the risk of potential liability for the agent and WFG. This could lead to litigation or regulatory investigation, and result in financial loss, fines and adverse publicity. As such, market conduct complaints are serious and will be investigated thoroughly, objectively, and expeditiously. Market conduct complaints may originate from policyholders, regulators, or third parties acting on behalf of policyholders or who otherwise believe they have a vested interest in the outcome. They will normally be received in the WFG head office directly but may originate in a WFG branch office or the insurer head office must be advised if a complaint originates in any field location or if contacted by a regulator, the police, or the RCMP seeking information about an agent or anyone else. 5.3 Process. All market conduct complaints should be promptly referred to WFG's compliance department, who will investigate the complaint. Notice of the complaint will be sent and escalated to the life insurer involved as required in the National Account or MGA contract with WFG. The compliance officer will send a client acknowledgement letter to the complainant within 5 business days of receiving the complaint. Compliance will also contact all the parties involved, and where necessary will request written statements. The parties from whom reports may be requested include the client, the branch manager, and the agent. Compliance will notify the agent/advisor involved in the complaint about the matter via email. Their statement will be requested on the complaint along with a copy of the complete client file to be sent to WFG head office. If the agent/advisor is terminated, no statement is required. However, a copy of the client's file will be requested from either the appropriate branch office or the fund/insurance company. If necessary, the compliance officer will complete a phone interview with the client to obtain more information and/or clarify details within the complaint. During the investigation, the compliance officer will keep the chief compliance officer informed of developments and will communicate with other members of senior management as required, and will consult the legal department where necessary. All communications, verbal and written, are to originate from the compliance department. Also, it is prudent that the individual agent who is the subject of the complaint have no communication with the complainant at any time during the investigation. The compliance department is responsible for conducting a fair and objective investigation, dealing solely with the facts uncovered. Once completed, a report and recommendations will be presented to senior management, who will decide on the appropriate action to be taken. Once a decision is made, the compliance officer will communicate it to the complainant by means of a substantive response. If the decision includes disciplinary action against the soliciting agent or any other field person, the CCO will communicate this in writing to the agent and their upline. Where the insurer takes control of the complaint, WFG will comply with and support the requirements of their complaint protocol. 5.4 Timeline. The purpose of this timeline is to indicate the steps to be followed in resolving client
complaints consistent with regulatory requirements. All timeframes are estimates and will vary with individual investigations. 5 days, the compliance officer handling the complaint makes initial contact with all parties and confirms nature of complaint. Notice of the complaint is provided to the life company involved. Also, the errors and omissions insurance provider is notified immediately of the potential damage or claim. 90 days, complaint resolution is communicated to the complainant, or if not yet resolved, a notice is sent that additional time is required to complete the investigation and arrive at a final decision. This step may be executed in cooperation with the affected life insurance company. 5.5 Handling complaints in Quebec. The handling of complaints from clients domiciled in Quebec differs somewhat from the other provinces. This policy reflects the complaint protocol issued by the Autorite de Marches Financiers, AMF, concerning the examination of complaints and the resolution of disputes. All market conduct complaints should be promptly referred to WFGIA's compliance department, who will investigate the complaint. Notice of the complaint will be sent and escalated to the life insurer involved as required in the National Account or MGA contract with WFGIA. Further, the compliance officer will contact all the parties involved, and, where necessary, will request written statements. The parties from whom reports may be requested include the client, the branch manager and the agent. 5.5.1 Purpose of the policy. The purpose of this policy is to set up an equitable examination procedure for all complaints received by WFGIA Insurance Agency Inc. It is intended in particular to govern the receipt of complaints, the sending of acknowledgments of receipt and notices to the complainant, the creation of complaint files, where applicable, the transfer of the complaint file to the Autorité des Marchés Financiers and the compiling of complaints for the purpose of preparing and filing an annual report to the AMF. 5.5.2 Controlling the complaints. The compliance department will ensure that this policy is properly administered and shall comply with the following procedures: to send an acknowledgement of receipt of the complaint to the complainant, to send the notices required, to send the file to the AMF, at the complainant's request, to maintain a central complaint registry, to file an annual report with the AMF. 5.5.3 Definition of complaint. For the purposes of this policy, a complaint is an expression of dissatisfaction which includes one of the following three elements: a reproach against the regulated person, i.e., the insurer, WFGIA, agent, The identification of real or potential harm that a customer has experienced or may experience. A request for remedial action. Note: the expression may be verbal or written. Written documentation must be obtained in order to proceed with our investigation. A first-level intervention consisting of a communication from a customer which is an informal step aimed at having a particular problem corrected, is not a complaint. Provided that the problem is dealt with as part of the regular activities and without the customer having to request escalation of the complaint. These would include initial, service and administrative issues. 5.5.4 Receipt of the complaint. A customer who wishes to file a complaint can do so in writing or via telephone. 4. Initial contact only. A complaint can be sent to WFG compliance. Written documentation must always be enforced. However, the email communication may be used for internal inquiries. The compliance department must acknowledge receipt of the escalated complaint within 5 business days. The acknowledgement of receipt shall contain at least the following information: a description of the complaint received specifying the actual or potential harm, the reproach against the regulated person and the request for remedial action, the name and contact information of the person responsible for examining the complaint. In the case of an incomplete complaint, a notice to the effect that additional information must be sent within 10 days, failing which the complaint will be considered to have been abandoned. A copy of the Quebec Complaint Protocol. A notice informing the complainant of his right to request, upon the expiry of a period of 10 to 20 days following receipt of all the information required or within 1 year following the response to his complaint, the transfer of his file to the AMF if he is dissatisfied with the response or the examination of his complaint. The notice shall also indicate that the AMF may offer mediation if the parties agree. A notice reminding the complainant that mediation is an amicable conflict settlement process in which a third party, the mediator, intercedes with the parties to assist them in reaching a satisfactory agreement. 5.5.5 Complaint File. A separate file will be created for each complaint received. In addition, a separate
complaint log will be maintained to track all complaints. The file shall contain the following: the complainant's written complaint, including the three elements of the complaint, the reproach against WFGIA, the insurer or the agent, the real or potential harm and the remedial action requested. The outcome of the complaint examination process, the analysis and the supporting documents. A copy of the WFGIA's final response, substantive response, set forth in writing and containing reasons for the response. 5.5.6 Complaint Examination. Upon receipt of a reportable complaint, the Compliance Department shall carry out an investigation. The complaint shall be examined within a reasonable time period of following receipt of all the required information. After the investigation, the Compliance Department shall send the final response in writing, giving the reasons therefor. 5.5.7 Transfer of the file to the authorized démarches financiers. AMF. If the complainant is not satisfied with the examination of his complaint by the Compliance Department or the outcome of the examination, they may request that their complaint file be transferred to the AMF. The complainant may exercise this right only upon the expiry of the maximum time limit allowed for obtaining a final response or no later than 1 year after the response has been obtained. The transferred file shall include all the documents regarding the complaint file. 6.0 Sales Process and Sales Illustrations. 6.1 The Sales Process. The sales process consists of all of the steps needed to make the sale. It begins with introducing yourself as an insurance professional and includes fact-finding using a needs assessment, making a recommendation, closing, and ending with the client taking action based upon your recommendations. A sales process which is comprehensive avoids potential problems and leads to better sales results. This section only addresses the face-to-face sales process. As an advisor, you are required to comply with numerous regulatory and industry standards in the course of operating your practice. It is critical for you and your clients that you operate your practice in a compliant manner. Always conduct a detailed fact-finding interview with your clients and prospective clients and make recommendations based on the results of your findings. Know your client. Prior to your choice of product or course of action, continually assess the level of sophistication and experience of the client, his/her dependence on or independence from your advice as an agent, and any other particulars of the client that may be pertinent to his/her insurance needs in recommending a course of action. It is essential that you know your client and find out as much as you can about them. As an insurance professional, your recommendations should reflect an understanding of the client's financial and personal needs, at least to the extent the client shared such information with you. It's a good idea to note requests for information that was not provided by the client. You should assess your client's needs based on information gathered through the fact-finding process and needs assessment. The process used to internal use only, WFG Canada Insurance Guide 52. Reach the recommendation should be documented and records should be maintained that show the scope and nature of the needs assessed. The steps used should be identified so that should the need arise to review the process, there is a paper trail that can be followed. The following are some of the more important categories of information you should collect for each client before making a recommendation and to understand a suitable product. Values and attitudes about financial matters, family, occupation, etc. Short and long-term financial and personal goals, objectives, and needs. Current and future personal circumstances, e.g., family status and general health status. Time horizon of when funds will be needed. Financial situation including income, general expenses, debts, tax status, savings, occupation, etc. For example, a large estate may indicate a need for privacy and probate bypass. Current personal and business insurance coverage, for example, a professional and/or entrepreneur may have a need for creditor protection. Business interests and business-related issues. Products or services you are not licensed to offer can only be mentioned if you clearly identify that they should be provided by another professional. If the client does not have such contacts, you can provide a list of referrals they can contact that can provide these other products or services. Do not give legal advice or assist in the draft or completion of legal documents such as wills, trust agreements, or contracts. If your insurance recommendations have income or estate tax implications, it is recommended that you advise clients to seek their own tax or legal advice. However, you should also provide disclosure of the conditions and qualifications that must be met to
receive favorable tax treatment to the extent such discussion is a necessary part of the sales presentation. Be certain that you provide a full discussion of penalties that may be assessed in the Event of early withdrawals. Explain the possible tax implications of withdrawals, policy, loans, etc. that are relevant to the content of the presentation. Always suggest that the client have your recommendations reviewed by his/her tax agent. Emphasize that you can't give tax advice. You must provide balanced and complete information on the benefits, cost, limitations, and contract terms of the products you present or recommend. You must disclose material facts which are necessary to prevent your statements from being misleading. Sales materials or presentations must provide all pertinent facts about the products and services presented or discussed with the prospect or client. Failure to fully disclose important details gives the appearance of a conscious desire to mislead or misinform the prospect or client. Comparisons between products and companies should be fair, balanced and accurate. General comparisons between different companies and their products can be made as long as the comparisons are balanced and complete. Consumers often perceive little difference between products and companies. They may therefore interpret criticism of one product or company as criticism of the industry at large. Being excessively critical of other companies can appear unprofessional and create a negative image for both you and WFG. It is easy to create false impressions about the strength or weakness of a company based on ratings data alone. This can lead to possible charges of misrepresentation. For more details on comparing illustrations, see the Sales Illustrations section. 6.2 Sales Illustrations. What are they? An illustration is any communication to a current or prospective client that shows numbers or graphs of future policy premium and/or values, or features that depend on them, for an individual life insurance policy. This definition is extremely broad and taken in context, it goes well beyond the traditional ledger to encompass such things as non-ledger, graphics, textual etc., illustrations, advertisements, product brochures, product comparisons, concept illustrations, agent-developed or third-party illustrations, videos, price comparisons, websites. Features would include such elements as premium offset, cash withdrawals, interest rate, guarantees, etc. Any concept illustration, e.g., buy term and invest the difference, retirement funding, etc., must comply with illustration requirements. 6.3 Illustration requirements. Specifics that must be addressed in presenting illustrations to clients are clear. There must be full and accurate disclosure to the client or prospective client. Also, the language used in the illustration must be clear and consumer-friendly. Using any language that could be misinterpreted or difficult to understand must be avoided. The client or prospective client must end up with a clear understanding of what he/she has bought or is considering buying. Explain that the illustration is presented for information only, based on certain assumptions, and is not an estimate or prediction of future experience. If you show an illustration to a client, it is your responsibility to fully explain its meaning. Discuss the following. The product being illustrated is a life insurance product whose primary purpose is to provide a death benefit. The illustration is an example only and merely shows how the contract can work under certain sets of assumptions. It is not a contract or estimate of future results. The policy has guaranteed and non-guaranteed elements. Withdrawals, fees, penalties, etc., as well as limitations, will have an impact on the policy, which must be fully explained. Explain that actual performance is extremely sensitive to changes in interest rates and show the leveraging effect this can have on results, downwards as well as upwards. It is the policy of WFG and most insurance companies whose products we distribute that the client or prospective client signs the illustration and that it accompanies the application. You should also give a copy to the client and maintain a copy in your files. Should questions arise after the sale, illustrations can be powerful tools for making a sale. If you use only approved illustrations and explain them thoroughly, you are living up to your responsibility as an insurance professional. This policy on sales illustrations does not apply to individual annuities or to group coverage but does apply to segregated funds. 6.4 Guaranteed values or features. Where reference is made in the illustration to guaranteed values or features, they must be displayed in the illustration. The term guaranteed can only be used when the values or features to which it refers cannot be withdrawn or modified by unilateral action by the insurer and which are not dependent on future experience. 6.5 Non-guaranteed values or features. All values, amounts, or features that are not guaranteed must be clearly identified as such. It follows that if values or features cannot meet the test of being guaranteed, they have to be identified as not guaranteed. The terminology, form, and content of the illustration must not imply in any manner that non-guaranteed values or features are guaranteed. 6.6 Illustration scenarios. Where non-guaranteed amounts are involved, the illustration must display at least 2 scenarios of illustrated results. And equally important, the general basis for each scenario and the key assumptions for each must be outlined in the illustration. This is one of the primary disclosure requirements for illustrations. The illustration must display at least 2 scenarios of illustrated results, a primary and an alternate, to provide the client or prospective client with a meaningful indication of the sensitivity of the results to variations to key factors, notably interest rates. Further, the key assumptions for selecting the primary and alternate scenarios must be outlined in the illustration. Most insurers' illustration software complies with this requirement. 6.7 Illustration identification. Each illustration must clearly indicate the following: the date on which it was prepared, the identity of the person for whom it was prepared, the name of the agent and the insurer providing the illustration. Each characteristic or assumed characteristic, essential in determining the illustrated results, age, gender, and rate basis standard / preferred / substandard, smoker / non-smoker. Each page or screen of an illustration must indicate clearly both the number of that page and the total number of pages in the document, example page X of Y. 6.8 Concept illustrations. This illustration policy applies equally to concept illustrations. We emphasize again that agents who choose to use third-party software, or otherwise customize their illustrations, must ensure it fully meets the requirements of this policy. Finally, WFG will continue to require that agents submit the specific illustration with each universal life application, signed by both the applicant and the agent. This illustration must match the policy being applied for. 6.9 Needs-based selling, reason why letter. The Canadian Council of Insurance Regulators, CCIR, and the Canadian Insurance Services Regulators Organization, CISRO, have endorsed 3 principles for managing conflicts of interest that might arise in the sale of life and health insurance products. These are: the interests of the client must be placed ahead of those of the agent. Actual and potential conflicts of interest must be disclosed, and The recommended product must be suitable to the needs of the client. Conducting a needs analysis prior to making a recommendation and providing a copy of this information and a brief and understandable description of the recommended insurance product and how it meets the customer's needs, is an essential component of treating customers fairly. Needs-based sales practices are part of a customer-focused approach to insurance distribution. They are an industry expectation, and a regulatory expectation and requirement in some jurisdictions. Needs-based selling includes conducting a needs analysis and providing a reason why letter with every transaction. 6.10 Reason why letter, content and structure. A reason why letter must be provided to the client no later than the date they receive the policy. According to the Canadian Life and Health Insurance Association Inc. CLIA. The content of the reason why letter must summarize relevant information from the fact-finding and needs assessment to explain the recommendation. Where appropriate, note differences between the recommendation and the client's choice of amount and/or type of coverage. Where appropriate, mention unmet needs to be addressed in the future. Include a call to action, i.e., ask questions if anything is unclear and retain for future reference. Each reason why letter should identify the product being purchased, type of insurance, the carrier, and brand name. Key facts. Needs and gaps in coverage identified. Plans to follow up on unmet needs. Discretionary fee choices. A reason why letter must be sent to the client no later than the date he or she receives the policy. Via email if the client consents. After each transaction, clients should endorse/sign the reason why letter, and a copy must be kept with the policy on delivery and the advisor file. Templates to assist agents with the completion of a reason why letter may be available through the insurance provider. Agents are encouraged to follow up with the preferred insurance provider regarding assistance in the completion of a reason why letter. Reason why letter and segregated funds, IVIC. Reason why letters must be included for segregated fund purchases, unless the information required to be provided to clients is included in some other form, i.e., trade
tickets, NAAF/KYC, client notes, and disclosures. Agents must also ensure that the fee structure of a segregated funds is also disclosed to the client in writing and should include why the recommended fee option is suitable. Please refer to Appendix G for supporting documents pertaining to client files. 7.0 Replacements. The replacement of life insurance policies is a contentious issue that all agents must fully understand and comply with. Improper and indiscriminate replacements and especially twisting or churning has resulted in severe fines being imposed on agents and their contracted life companies. Replacement regulations exist in every province and recent changes have led to the introduction of requirements for transparent disclosure to clients on the benefits and disadvantages of policy replacement. 7.1 What is a policy replacement? A replacement of a contract of life insurance means a transaction whereby life insurance is purchased in a single contract or in several related contracts by a person from an insurer, and as a consequence of the transaction one or more contracts of the insurance are rescinded, lapsed, or surrendered, changed to paid-up insurance or continued as extended term insurance or under automatic premium loan, changed in any manner so as to effect a reduction in benefits, changed so that cash values in excess of 50% of the tabular cash value of the insurance contract are released, or subjected to borrowing of any policy loan values whether in a single loan or under a schedule of borrowing over a period of time whereby an amount in excess of 50% of the tabular cash value is borrowed on one or more contracts of life insurance. but does not include a transaction where a new contract of life insurance is made with an insurer with whom the person has an existing contract of life insurance in furtherance of a contractual conversion privilege exercised by the person. A contract is replaced by an annuity, or a contract is replaced by group insurance. The replacement of life insurance contracts is a controversial issue. The provincial insurance regulators do not suggest that one type of product better suits the needs of a consumer to a greater degree than another product. A life insurance replacement declaration document has been designed to provide the purchaser of life insurance with the basic information they will require to make an informed decision when considering the replacement of one contract of life insurance with another. In the event of replacement, agents and the new insurer have a responsibility to comply with the requirements. 7.2 Duties of agent. It is the responsibility of the life insurance agent to ensure that any replacement of existing insurance occurs in accordance with the principles of interests of the client and needs of the client in insurance regulations and codes of conduct. This requirement, stated simply, is that the client's interests and needs must be placed first. It requires the highest level of integrity and performance on the part of the agent, and that the agent is obligated to recommend the amount and type of life insurance that is best for the consumer's circumstances. As each situation is unique, the process by which the replacement of life insurance occurs and the manner in which the advantages and disadvantages of replacement is illustrated must be tailored accordingly. All aspects of insurance coverage will not be of significant relevance in each replacement situation. However, the responsibility to ensure that all significant information relative to the replacement is provided to the consumer prior to commencing with an application for life insurance intended to replace existing coverage rests solely with the agent. Submitting an application for new insurance prior to presenting the written comparison is not acceptable and may result in disciplinary action by the insurance regulators. The client should be encouraged to ask additional questions following the joint review and discussion of the questions outlined on the LIRD. Please refer to Appendix G on the Insurance Client File Package. 7.3 Direction. If after consultation with the client, completion of needs analysis and review of existing coverage, it has been determined that replacement of some or all of the existing coverage is in the client's best interest, it is the agent's responsibility to gather all the information required to prepare a written comparison. 1. The agent should obtain from the applicant a list of all life insurance contracts intended to be replaced. 2. The agent shall complete and sign the following documents. I. A life insurance replacement declaration. 2. A written explanation of the advantages and disadvantages of replacing the contract of life insurance. While the questions outlined on the LIRD serve as a guide to complete this summary of significant comparative information, it is equally important that the written explanation and comparison include all factors supporting both replacement and conservation.
The format of the written explanation is left to the discretion of the agent. In complex cases, a comparative format with explanatory recommendations may be warranted and should be completed. However, in all cases the written explanation must be complete and comprehensive. The agent shall review the completed LIRD and written explanation with the applicant. Obtain the client's signature on both a copy of the completed life insurance replacement declaration and the written explanation, attesting to the receipt of both the completed declaration and of the completed written explanation from the agent, and leave a copy with the client. Note, if the applicant is not the life insured, the agent shall obtain the signature of the life insured on a copy of the written explanation, attesting to the receipt of the written explanation from the agent. Within 3 working days after receiving an application for a contract of insurance, the agent shall forward a copy of each completed life insurance replacement declaration, as reviewed with the applicant by the agent and signed by the applicant, to every insurer whose life insurance contract is intended to be replaced. Some jurisdictions may also require the LIRD to be sent to the existing insurer. Agents should check the requirements of applicable statutes and bylaws. At the time of this writing, below you will find the requirements pertaining to replacing insurance contracts. In each jurisdiction, a photocopy or original of the life insurance replacement declaration, signed by the client, along with a copy of the written explanation of the advantages and disadvantages of replacement signed by the client, must be retained in the agent's file and be producible by the agent to counsel upon request. If the agent is currently operating under the supervision of a supervising agent, the written explanation of the advantages and disadvantages of replacement must also be signed by their supervising agent. This co-signed copy must be maintained by the agent for review by counsel if requested. In all circumstances, it is essential that the agent advise his/her client not to cancel their existing coverage until such time as new coverage has been approved and is in force. Manitoba. For the province of Manitoba, a written comparative analysis, WCA, of the advantages and disadvantages of replacing the life insurance policy must be completed in addition to the Life Insurance Replacement Declaration, LIRD, as per Section 9(1)(b) of the Life Insurance Agents and Accident and Sickness Insurance Agents Licensing Rules. The written comparative analysis must be countersigned, as well as a needs analysis and the LIRD, as per Section 9(1)(c)(2) of the Life Insurance Agents and Accident and Sickness Insurance Agents Licensing Rules. If an agent changes his or her supervising agent, he or she must without delay submit a new declaration to the council. The same applies, with necessary changes, in the case of a change in a supervising agent's designate as per Section 7(4) of the Life Insurance Agents and Accident and Sickness Insurance Agents Licensing Rules. Agents under supervision must ensure that each life insurance application and needs analysis is countersigned by the supervising agent as per Section 8(a)(2) of the Life Insurance Agents and Accident and Sickness Insurance Agents Licensing Rules. 7.4 Compliance. Where complaints received from clients indicates a replacement of insurance may not have been in the best interests of the client, or that the client was not provided with full information required to make an informed decision, the agent will be required to provide substantiated evidence and documentation which demonstrates that full and proper disclosure was completed and presented to the client prior to the completion of a new application. This documentation must include, but may not be limited to, the Life Insurance Replacement Declaration and the written explanation of the advantages and disadvantages of replacement. Non-compliance with these requirements could subject the agent to the penalties set out in provincial insurance regulations. These regulations also define replacement, describe the agent's responsibility when replacement of an enforced contract is recommended by an agent or directed by the policy owner. It also provides the consumer with the right to withdraw the application and receive a full refund within 20 days of the date the completed disclosure statement was signed by him. Agents who recommend, or who are instructed by the policy owner, to replace a contract of life insurance should become familiar with their responsibilities under the regulation. The life insurance replacement declaration form must be completed prior to the taking of a new application. Legibility is a must when completing this form. If the information on the form cannot be read, it is of little value to the client. Agents who do not present the form in a legible manner would not complying with the regulation.
For a sample LIRD disclosure document, please see Appendix G. 8.0 Insurance OR Capital Needs Analysis. Insurance regulation in various provinces requires that licensed agents analyze their clients' insurance needs before they complete a new insurance application. This is a sound business practice to ensure the client's needs are fully addressed and the products you recommend are suitable and appropriate. Transferring risks through insurance is an effective risk management technique. Life insurance provides protection from loss of income that arises from premature death. Income, for the purposes of a needs analysis, can be identified in terms of cash flow required by surviving spouses and children to offset immediate, ongoing and future living expenses needed. 8.1 Costs associated with premature death. 1. Immediate costs, known as final expenses, include funeral expenses, probate fees and taxes, debt payments, mortgages and establishing an emergency fund for agents. 2. Ongoing expenses required to provide an income for living expenses. 3. Future expenses including funding of future educational needs. 8.2 Determining the right amount of insurance. Insurance needs analysis, also known as confidential questionnaire or fact finder, will identify your client's financial goals and objectives, your client's short-term needs, capital required due to early death, your client's long-term needs, retirement planning. 8.3 How is the analysis done? What's required for a financial needs analysis? In fact, it is so important that it is legislated that all advisors must do a needs analysis before presenting any product or strategy to clients. To estimate the amount of life insurance required, an agent must be able to access, with the client, the cost that would be incurred by the premature death of the proposed life insured. This can be determined in a fact-finding interview with the client that includes a needs analysis. Information gathered includes your client's personal details, current assets and liabilities, income less expenses to determine any available income or cash flow available to work with, financial needs that need to be addressed and the order of their importance. Factors such as emergency funds, life and disability insurance, retirement capital, short-term insurance, a will and so on. Schedule of current insurance policies and investments. Beneficiary nominations. Realistic assumptions as to future inflation and interest rates. There are a number of distinct methods to determine the amount of life insurance that is appropriate for an individual client. Many tools are provided free to agents by life companies with which they are contracted. A sample financial need analysis document is available on my WFG. Please refer to Appendix G on the Insurance Client File package. Regardless of the tool used, remember that it is your responsibility as a licensed agent to do a needs analysis for every insurance client and that copies of the analyses are kept in the client's insurance file. Insurance regulation in various provinces requires that licensed agents analyze their clients' needs before they complete a new insurance application. This is a sound business practice to ensure the client's needs are fully addressed and the products you recommend are suitable and appropriate. 9.0 Segregated funds. 9.1 Know your segregated fund client. WFG guidelines for marketing segregated funds require insurance agents to complete and maintain a record of client contacts, know your client, document, and trade confirmations for all segregated fund clients. The leveraged loan disclosure and limited trading authorization or power of attorney, POA, where applicable, is also required. Note: the marketing of mutual funds is subject to specific regulation by the Canadian Investment Regulatory Organization, CIRO. The marketing of segregated funds is regulated but is not subject to specific regulations similar to mutual funds. Mutual funds and segregated funds are similar in design and performance. The single notable distinguishing feature is a guarantee of the principal component of segregated funds. Provincial insurance regulations require that agents' operational and trade practice activities in the sale of segregated funds be ethical. These regulations, further, stipulate that an agent may be guilty of misconduct if the agent fails to reasonably ascertain through prudent fact-gathering a consumer's insurance needs, fails to ensure that a consumer or insurer is fully informed of all relevant information that will allow the consumer or the insurer to make an informed decision, fails to reasonably carry out a consumer's lawful instruction, fails to maintain proper records, fails to follow sound business practices. A life insurance agent is a professional and has a fiduciary duty when dealing with clients. This high standard will be applied when considering the conduct of an agent. 9.2 Priority of client's best interest. In the sale of investment products, a high level of competence, knowledge, care and skill is
expected from licensed agents. If that is not evident, an agent may be held to not have acted in the best interests of the consumer. Agents selling segregated funds must learn the principles of investing and in particular the concept of asset allocation. The client is relying on the expertise of the agent to provide knowledgeable advice on the investment products being offered. Know your client, KYC. Segregated funds are investment products and as such a properly completed Know Your Client document, KYC, is an essential part of determining a consumer's needs. A KYC document must assess 4 critical factors respecting the consumer, and they are: the consumer's investment time horizon, the consumer's risk tolerance, the consumer's investment knowledge, and the consumer's investment objective. An effective KYC document should as well provide important information respecting the consumer that will provide a compliance person with sufficient information to assess the product being recommended to the consumer. 9.3 Full disclosure. An agent recommending a segregated fund has an obligation to disclose clearly in terms easily understood by the consumer the nature of the underlying investments being recommended. Where the underlying investment in the segregated fund is equity-based, the agent must ensure that the risks of equity investing are clearly explained and understood by the client. When an agent recommends and/or puts in place a leveraged loan strategy, the agent must ensure through proper disclosure documents that the risks of borrowing have been fully disclosed and acknowledged by the client. An agent will be expected to be able to demonstrate that proper fact-finding has been undertaken to confirm that the consumer has sufficient financial resources to make the interest payments and/or meet a potential margin call. If surrender charges apply, these must be disclosed in a form that is easily understood by the consumer. Whenever disclosure is required, a signed acknowledgement of the disclosure document must be obtained from the client. A signed copy must then be given to the client and a signed copy kept in the client's file. 9.4 Executing client instructions. All lawful instructions from a client must be carried out, even when an agent disagrees with the client's introduction. In the event an agent disagrees with the instruction of the consumer, the agent will be expected to have documented evidence of the advice given and the reason for it. 9.5 Proper books and client records. An agent must maintain proper records of all segregated fund client transactions. These include a record of client contact or application form, a current signed copy of a KYC document including risk assessments and recommendations made to client, a signed leveraged loan risk disclosure document if applicable, proper documentation evidencing trade instructions and confirmation of trades. Where verbal instructions are given, additional written confirmation is strongly advised, unless calls are recorded and retained for future reference. Log communications and discussions with clients. 9.6 MGA Supervision Policy. The WFG Compliance Department will establish guidelines for risk-based oversight of segregated fund transactions and application submission procedures. The Chief Compliance Officer is the designated person from WFG responsible for the overall management and supervision of the agency. A reasonable level of risk-based oversight of segregated fund sales will be in place based on detailed compliance policies and procedures outlined in this compliance guide, including but not limited to: all WFG agents will be provided access to the WFG Insurance Guide and any other required training to enable them to determine that the recommendations they make are complete and suitable for their clients. For segregated fund-based leveraged loan strategies, WFG's regional branch managers will review and approve the applications. A risk-based oversight of segregated fund accounts will be performed by WFG head office personnel based on trending and identified areas of concern such as persistency and client complaints. WFG agents' contract contains compliance provisions requiring agents to keep proper records as outlined above. 9.7 Point of sale disclosure. Implementation of new requirements for segregated funds. On January 1, 2011, new requirements went into effect for segregated funds. The new requirements relate to disclosure at the time the client enters into the segregated fund contract. The key requirements are as follows. The information folder must be delivered to the client before he or she signs the application for the segregated fund. The information folder must contain a key facts document that briefly describes the key features of the contract. Fund facts documents for each segregated fund available under the contract must be delivered with the information folder. The client may choose to receive these disclosure documents either physically, in person, mail, or fax, or electronically, email, or viewed by the client online. The client must sign acknowledging receipt of these documents. This requirement is unchanged, but the acknowledgement may be modified to include a reference to the fund facts documents. The insurer must offer a 2-day rescission right, i.e., free exit, that applies to the decision to enter into the contract and/or any fund selection. 10.0 Leveraged investing. 10.1 What is leveraging? Leveraging consists of borrowing money for investment purposes. This allows clients to make a larger investment than if they only draw on their own savings. Borrowing to invest can involve significant risks and loss of investment. Before you recommend a leverage strategy to any of your clients, you must assess your client's risk profile, and it is strongly recommended that you complete an investor questionnaire. Provide and review documentation given on the risks of this strategy. Determine the client's tolerance for risk. Make sure they fully understand and have evaluated the risks of borrowing to invest and that this strategy fits into Their risk profile. Make sure that their investment horizon is long enough, 5 to 10 years minimum. Make sure you fully explain the tax impact of this strategy. Make sure the loan amount can be repaid without having to sell their investment. Make sure they understand exactly how much money they could lose in a worse case scenario. For example, would they be able to handle a 30% decline in the value of their investments? Note the main points of conversations with your clients so you can refer to them if necessary. Before recommending leverage strategies to your clients, make sure you have verified that they have a medium to high tolerance for risk, have the required knowledge. Normally, they should already be familiar with the financial markets and have a certain amount of investment experience. You recommend they adopt this strategy. Have long-term financial goals. Do they have any investment or other loans outside of their account with WFG? Have the required liquidity. For example, if they are having problems making payments on their loans, mortgage, credit cards, etc., leveraging is not for them. Are able to repay the loan. For example, if their investments decline in value, the financial institution that loaned them the money may call the loan. Are in a healthy financial position. Have a high tax rate. One of the benefits of the strategy is that the interest may be deducted from their gains for tax purposes. The higher their tax rate, the more significant this benefit becomes. The tax benefit should not be the only reason for using this strategy. Some of the preceding points are discussed in greater detail below. They have a medium to high tolerance for risk. They should be comfortable with the risk of borrowing for investment purposes. This strategy is not appropriate for conservative investors, whose profiles call for investments with a low level of risk. This strategy is more suitable for investors with long-term investment horizons, 5 to 10 years. It is not suitable for older investors or those approaching retirement who seek to maximize income and preserve capital. Tax rate is fairly high. Borrowing money to purchase mutual funds or a segregated fund is particularly suitable for investors with fairly high tax rates because the interest payable on the loan is tax deductible. However, borrowing is not necessarily a good strategy based solely on tax benefits. They should not consider only this criterion when deciding whether or not to use leveraging. Healthy financial position, they should be able to repay the loan in addition to the interest stipulated in the loan agreement. Generally, a loan for the purchase of an investment should not exceed 30% of your net worth and 50% of your net liquid assets. For example, if your net liquid assets total $200,000, you should not take out a loan for more than $100,000. Required knowledge: your clients need to be aware of the risks associated with borrowing for investment purposes. When they use leveraging, the value of the securities purchased could decline and be lower than the value of the loan. They may be required to incur losses according to the terms of the loan. Furthermore, if they rely on the return generated by the securities they have purchased to cover the cost of the loan, they may be unable to repay the loan. Once they have taken out a loan, advise your clients to notify you if their financial position changes. For example, divorces, loss of employment or retirement are events that should prompt them to review the suitability of leveraging. Monitor interest rates. Because when they rise, the cost of borrowing usually increases. Why do some people borrow for investment purposes? They have trouble saving. However, when they borrow, they have an easier time repaying their debts because they are obliged to do so. Borrowing to invest forces them to save. They want the potential to earn higher returns by assuming higher risk. They want to benefit from the fact that interest paid on the loan can be deducted from any gains for tax purposes, with exceptions such as borrowing to contribute to a registered retirement savings plan, RRSP, or a tax-free savings account, TFSA. The drawbacks of borrowing for investment purposes. Using this strategy may involve several risks. The return on their investments may be lower than the borrowing rate, after income tax is taken into consideration. Investments may lose value. Their financial institution may demand repayment of the loan if your investments lose value. For example, if you borrow $100,000 to purchase an investment that declines in value and is worth no more than $60,000, the financial institution may demand that you immediately repay all or part of the loan. Conclusion: taking only the amounts accumulated into consideration. When total returns are high, leveraging enables clients to accumulate more wealth than would be possible simply by investing available amounts. On the other hand, when returns are low or negative, it is best not to use leveraging.